Welcome to the Deeper Dive, the show that unpacks the why behind the market's what. I'm your host, Alex.
And I'm Ben. It's great to be back for another episode.
Today, we're digging into one of the biggest market puzzles of 2025. It's a story that pits a safe, steady global strategy against a high-flying superstar. And the outcome, well, it was something few people predicted.
It's a classic David versus Goliath setup, except the roles were reversed.
Right.
On one side, you have VXUS, the Vanguard Total International Stock ETF.
Okay.
It's the whole world in a basket, minus the US. Think of it as the diversified, slow and steady workhorse.
And that workhorse had a spectacular 2025, delivering a return of over 30%.
Wow.
A huge win for global investors. But that brings us to the puzzle. On the other side, you have EPI, the Wisdom Tree India Earnings Fund.
Right.
India, the market everyone, and I mean everyone, has been calling the growth story of the decade.
Right. All the headlines pointed to India. Yeah. A young population, a manufacturing boom, a rising middle class. The long-term narrative felt bulletproof.
Yet its performance in 2025 was a flat line. A return of just 0.5%.
Wow.
Essentially zero. So that's our what for the day. The broad, boring international fund absolutely crushed the high-growth darling. And for our deeper dive, the why is everything. Right.
Why did the tortoise so decisively lap the hare?
Yeah.
To get to the bottom of it, we have to dismantle both of these ETFs and see what made them tick in 2025.
Let's start with the winner, VXUS.
Okay.
What fueled that incredible 30% surge? It feels too big to be just a generic markets went up story.
You're right, it was much more specific.
Okay.
A huge driver of that performance was the powerful and largely unexpected rally in developed markets. Right. Specifically, Japan. The Nikkei 225 index had a historic year, surging over 26%.
A market that was essentially written off for 30 years suddenly came roaring back to life.
Precisely. Decades of corporate governance reforms finally started bearing fruit. Okay. A weaker yen provided a massive tailwind for its exporters, and global investors, hungry for value, rushed back in.
Wow.
So because VXUS has a significant weight in Japan and other developed markets in Europe that also did well, it was perfectly positioned to capture that revival. It wasn't an emerging markets story, it was a developed markets comeback.
Okay. That explains the surprising strength in the rest of the world. Yeah. So let's turn to the heart of the puzzle. Why was India so stagnant? You had headline GDP growth over 7%, which is phenomenal.
Right.
It feels like being at a massive party where the music is blasting, but nobody's dancing.
That's the perfect analogy, Alex, and it reveals a fundamental truth of investing.
Which is?
A nation's economy is not its stock market.
Right.
There were three powerful headwinds that conspired to ground India's high-flying market in 2025.
Okay.
The first, and maybe the most insidious, was the currency. The Indian rupee. It had a brutal year, falling around 6% against the US dollar.
Wow.
Making it one of Asia's worst-performing currencies. For a US investor buying an ETF like EPI, that's a direct 6% loss before you even consider the performance of the underlying stocks.
It's like trying a run up and down escalator.
Yeah,
You're working hard just to stay in the same place.
exactly. And a weak currency spooks the big money, which leads directly to the second headwind.
Okay.
Massive foreign capital outflows.
Investors get nervous and pull their money out.
In historic numbers. How much? In 2025, foreign institutional investors pulled a record-setting $18 billion out of Indian equities.
18 billion. Whoa.
When a wall of money that big is heading for the exits, it creates immense selling pressure that can smother any potential rally.
Right.
It becomes a vicious cycle. The currency weakens, so foreigners sell, which weakens the currency even further.
So you have a currency anchor and a capital flow vacuum.
Exactly.
What was the third headwind?
This is the one that ties it all together.
Uh-huh.
Valuation.
Ah,
Coming into 2025, the Indian market wasn't just expensive, it was priced for absolute perfection.
the hype had gotten ahead of the reality.
Completely. The market was like a star athlete who'd already been awarded a record-breaking contract. Right. They couldn't just have a good season. They had to deliver a legendary MVP-level performance just to justify the price tag. Wow. And while India's corporate earnings in 2025 weren't a disaster, they were merely good.
They failed to meet the heroic expectations already baked into stock prices. So it's a trifecta of pain.
Yeah.
A falling currency that erodes returns, huge foreign selling that creates a ceiling for the market, and sky-high valuations that leave no room for error.
And it all happened despite a healthy economy.
Right?
It shows that in the short term, the mechanics of the market, currency, flows, and sentiment can completely overwhelm the long-term fundamental story.
VXUS won the year not because it was filled with superstars, but because it was diversified and held assets like Japan, where expectations were low and the surprise was to the upside.
It's a powerful lesson in not putting all your eggs in one narrative basket, no matter how compelling that narrative is.
India was the hare, sprinting for years and priced for incredible speed.
Yeah. In 2025, it had to stop for a breather. VXUS was the steady tortoise. And it reaped the rewards of patience and diversification.
Which leads us perfectly to our closing question for the audience.
Let's do it.
As always, we want to leave you with something to think about.
Let's hear it.
Now, here's a question we'd like you to think about. When a premier growth market like India, backed by an undeniable long-term story, stumbles and underperforms so dramatically, is that a red flag warning that the story is fundamentally broken?
Or, after letting all the hot air out of the valuation bubble,
Yeah?
does this period of stagnation represent the single most attractive entry point for long-term investors in years?